what's good, guys? We'll just go through a quick explanation of a market maker buy model, just so you guys know what it is. So it's basically saying that price consolidates, and then it has a bearish rally, creating lower lows, lower highs, lower lows, lower highs. And obviously on the way down, you do not want these highs to be taken out, because these are points on liquidity that you want to see as profit targets until you go all the way back up to this buy side liquidity level draw right here. So after you consolidate down, you do want to see price come into a high time frame PD array slash like fair value gap or something. So let's just say there was a 1 hour fair value gap, or for example in the trade that we took, it was a 4 hour fair value gap, and then we also had a level of sell side around here, and then as you can see we internally swept right here. But yeah, after you tap the fair value gap or take out a level of sell side liquidity or even buy side, you want to see a displacement slash market structure shift slash break structure to the upside, and then a retracement into a fair value gap right here, and that's where you'd be taking longs with partials at this high, and then at the overall draw on buy side. And the person that I learned the video that I learned this strategy from, the person said whenever there's a fair value gap, you continue taking, you just enter and your overall target is buy side. It was a brief explanation, and I'm not blaming this guy for the losses that I take today, but yeah, I just wanted to let you guys know like what type of edge slash strategy I was following in order to take profits using this market maker buy model. And yeah, so I was thinking whenever it retraces into a fair value gap, I can just add an order and we'll target buy side, and that would be the trade that we could take. So yeah, real quick explanation: market maker buy model, consolidation, creating a buy side liquidity, creating lower lows, lower highs, leaving clear draws on liquidity that need to be taken out, and then price eventually comes to a point where it takes out sell side or a high time frame fair value gap slash order block or whatever. You want to see a displacement past the most recent high right here, and then retrace into a fair value gap, and you just add positions until you hit buy side liquidity, and that's what I was going for today.
This is what I see for GU. We just had GBP news, which was bullish, and we do have PPI later, so at most we're taking a little scalp. On the 4 hour, we're holding a bullish 4 hour fair value gap, and I would say obviously the higher time frame is bullish because we broke structure right here. The 1 hour is bearish though, because we did just break structure to the downside, but who knows, we could get a big reversal candle all the way back up to the upside, showing that it's a 1 hour breaker structure fake out. But yeah, clearly holding this 4 hour fair value gap quite nicely. If we now scale into the 15, you possibly could say that this is an area of sell side liquidity. On the 5 minute, we could be breaking structure to the upside on the 5 minute. I would like to see this 5 minute fair value gap get disrespected though after it breaks structure past this high. Scaling down even into the 1 minute, you can see that we clearly internally sweep right here. Displacement past this high, and a retracement into a fair value gap or an order block would be nice, and we're about to get that London liquidity. On the 1 hour though, I do want to see a big bullish candle back up to the upside, showing that it's a fake out breaker structure. But yeah, 5 minute break, disrespect this fair value gap, and we could be in some longs towards. I also do want to see if we can get some displacement past this high on GU after we just internally swept once again. We've got a nice displacement right here. I would be keen for an entry, to be honest. Maybe if it taps us inverse 5. I want to see it break on the 15 though. We've got 5 minutes to do that. Okay, so we got a nice 5 minute break right here. We have an inverse 5 minute fair value gap that we could look to long off. Realistically, I do want to see it break on the 15 as well, but if we can't, that's all good. Where would I want my entry to be on this trade? Somewhere around there. Entering here, stop loss at this low. Take profit 1 being the end of this fair value gap. Me personally, I'd actually enter on that, and we actually could be in pretty soon. The question is, would I actually risk my real money on this? Like, that's what I really just gotta look into and think about. Obviously we're inside of this 1 minute fair value gap right now. If it doesn't hold this, then I'm not really keen, but like realistically I just want to see a big wick to the downside without breaking structure or like disrespecting any bullish fair value gaps. Yeah, and per usual I always do post out my trades that I will be taking in the Discord, so if you are looking for signals, looking for someone to trade with, just hop on in. We're pretty bullish. Maybe we should have entered on here. It hasn't even tapped into the inverse 15, so probably going to be making a 5 minute fair value gap that we can enter on. Yeah, we can see it right here. So we want to see a retracement into here for an entry, and it does look like it's going to be breaking structure on the 15 within the next 1 minute and 31 seconds. We just want to see it close above this high, retrace into the 5 minute fair value gap, and I'll take profit at the 1 minute fair value gap. Is it going to be a 15-minute break? We got 10 seconds. We're going to see it close above this red line. If it doesn't, that's not super great confluence. If it does, then I'm definitely in for longs. 3, 2, 1, closed above. That's great. We got a 15-minute break. Our 15-minute is now bullish. So the only thing against us is the 1 hour is kind of bearish because we broke structure to the downside, but we could easily be closing above it, above this low right here, showing that's a fake out, but we just want to see a retracement into our 5 minute fair value gap. Before we look for an entry, our first take profit is this 1 minute fair value gap, and hopefully it doesn't rally up without retracing into here before we get an entry. But yeah, just going over this again, we got sell side, internal 5 minute break, 15-minute break, retracing to this 5 minute fair value gap, retracing into the 15-minute fair value gap. Take profit 1 is at the 1 minute fair value gap. Next take profit could be at this high, which would be a 15-minute draw on liquidity, I think. The 1 hour was bullish. I think this was a trade where I could leverage 1.5 to 2%. I feel like if it's low probability or there are some confluences which mean you shouldn't trade, you should scale it to 0.5 or 0.75. If most of your confluences are lining up, you can jam it at around 1%, and all the confluences lining up, that's 1.5, 2%, 3%. Below market structure. It's all about probabilities. Ain't no way, bro. Ain't no way. Fuck this. Should I have just entered here, bro, on this 1 minute fair value gap? After it broke structure on the 1 minute. Bought here. Stop loss being here. No, there's no point in that because my original entry would have been below my stop loss, so there's no fucking point of that. Sometimes you just don't get your entry, bro, that's life. Sometimes you just don't get filled, you know. You don't always get what you want, but... Okay, so what could I have done better next time? Maybe I should have just entered straight away on this 1 minute. But then that would have been like a shitty risk to reward. Is this a market maker model? Take out the 4 hour fair value gap, take out sell side, internally sweep, consolidate, break, just continue higher. Here's the thing I'm struggling with, bro. Like, I genuinely don't know if I should alter my strategy, take these trades which are less probable, have less probability, and like overall don't have as much of a high probability chance of hitting, or do I just am I just trading in a time where the markets aren't that great, where price action just isn't ideal for me? I genuinely don't know if I right now should be altering my strategy, or I should just stay disciplined and wait for better market conditions. But I looked at the market maker buy model, and it said, yeah, it engineers liquidity all the way down. like all of that shit, and then it taps into a high time frame period, which is the 4-hour fair value gap. Clearly took out a level of sell side, internally swept 3 times, got displacement past this high. Should my entry have been on this 1 minute fair value gap? Potentially that is where I should have entered, but realistically I wanted to enter on the 5 minute and the inverse 5. Next time you trade in market maker buy model, enter on the first 1 minute fair value gap / fair value gap after displacement. Maybe I want to look for an entry inside of this fair value gap, target being buy side, stop loss being right here. It's a bit late, but I reckon it could hit, bro. It could hit. Still 11 pips, that's still a decent trade. Am I forcing an entry a little bit? So yeah, we're entering here, we're targeting buy side. This is a late entry to a market maker buy model, or whatever that shit is called. Okay, we're in buy. Boom. Got filled at 7741 right there, and our target is buy side liquidity. Okay, this trade's not looking great right now. What are some of the problems that we did? Trading after TPs have been hit. That's one thing we did wrong, and another thing is trading with a 5 minute fair value gap below our stop loss. Unfilled confluences below our stop loss. Anything else? Trading before if we know the 1 hour is a break or a fake out. Trading before 1 hour confluence. Other than that, I think everything was decent. Trend was kind of bearish. Overall is kind of bullish, so who the fuck knows. Close below. We want to see a close above, otherwise we're kefed. And yeah, I think the fair value gap is definitely a big confluence. Maybe we want to give it space like that, but don't change it. You're only supposed to risk a certain amount, and we just got to stop ourselves out when it goes there. Even if you lose a trade, that's just part of the game. Learn from whatever mistakes you did wrong. We got stopped out. What I could have done better was not trade after certain take profits have been hit. Second thing, shouldn't have traded with unfilled confluences like these ones with our stop loss, and we shouldn't be trading before if we knew the 1 hour confluence had broken structure or not. But just maybe we might be able to look for a re-entry on this 15 minute fair value gap, but maybe it's going to tap into our optimal trading entry right here. Usually I don't like to look for re-entries, but because I didn't look for a re-entry, was it yesterday? Yeah, I'll allow myself to potentially have a re-entry today, but we want to see some more confluence. Stop loss probably being at the low. Take profit 1 probably being the previous high, and then buy side liquidity. I am going to be back, but I might enter while I'm not here if it breaks on the 1 minute. But yeah. Hi boys, I'm currently not at my laptop right now, but we do have an entry that I might be entering on. I'm just not at my fucking setup. So if you see some numbers pop up on MetaTrader, we're in right now if we get this 1 minute fair value gap after bouncing off that OTE. Alright boys, we're currently in right now. So yeah, trading after my TPs have been hit, yeah, that's slightly against us. But the 1 hour, as you can see right here, it closed above it, so it was a 1 hour fake out, so that's been cleared off. Trading with confluences, with unfilled confluences below our stop loss, not really, we filled those fair value gaps now. This is now a valid trade, as well as, I don't know if you guys saw when I did this, but I put an optimal trading entry, held it quite nicely. 1 minute break right here. I was going to enter on this 1 minute fair value gap, and I realized we got one right here, so we can just enter there. Target is buy side, and who knows, bro, we might actually win all our money back. Could potentially do that. We got filled at 149. Where the fuck did we get? No. I bought Euro JPY on my fucking days. Surely, please. Bro, I need to, like, I always buy the wrong pair, man. It's so bad, bro. Like, it's so stupid, man. As long as it comes, honestly, I'll take anything in here. Honestly, fuck, I can't believe I bought Euro JPY, bro. That's such a fucking, oh my days. Alright. Long from here to buy side. Stop loss will be at this low. If we can get a retracement into this fair value. Alright, we're in. Whatever. 2-8. It's alright, it's whatever. Oh, should we add some more inside of this fair value gap? Alright, we're in another position. Fucking Euro JP, I bought Euro JPY again, you fucking cunt. 1.0 you're in right now. Oh, we've been stopped. I was just backtesting, so this is what I learned from my trade. A few reasons why we shouldn't have even traded in the first place was this 1 minute fair value gap, which was our original take profit when we wanted to see price enter into the 5 minute fair value gap, but we didn't enter. It hit our first take profit, so we shouldn't have traded after this take profit, and this take profit had been hit. The second thing was we had a 1 minute break right here, and we were inside of a 1 minute bearish fair value gap, so we should not have traded after we had bearish confluences. The third thing I did was trade before the 1 hour. It showed that it was a fake breaker structure, so we wanted price to close above this 1 hour line right here. It shows a fake breaker structure. And I also should not have traded with a 5 minute fair value gap just underneath my stop loss, because there's a high likelihood that it's going to go there and fill that. So yeah, that's what I should not have done for my first trade, and I'll get into my second trade. Alright, so this is the second trade we took. It was after I retraced into the 5 minute fair value gap, tapped into optimal trading entry, 1 minute break right here, entered on this 1 minute fair value gap. What I should have noticed was we did break structure to the downside on the 5 minutes, so I should not have traded. And I was also greedy, so I added more positions when I retraced into this 1 minute fair value gap. And I also did my analysis wrong, because I thought that it was a 1 hour break fake out, but apparently it closed below it. So yeah, big loss today. There are some things I did learn from these trades, and I'm going to implement next time before I trade. So not trading unless all time frames are in my direction and bias. So I at least want the 1 hour, the 15 minute. Nah, I'm not even joking. You gotta have daily, 4 hour, 1 hour, 15 and 1. All five of these in my bias, and if they aren't, then I want you to fucking roast me in the comments. Number 2, double checking my analysis and going over the time frames I use to make sure my analysis for my bias is correct. Yeah, I always need to double check because I forgot to double check the 1 hour today, and that led to me taking a trade when I shouldn't have. Not just that, but yeah, it's okay to retrade, but yeah, I shouldn't retrade next time. But like, this retrade was not a good trade because I had so many mistakes, like improper analysis and over leveraging. I shouldn't trade if certain take profits and price points have already been hit, and I should not trade if we have 1 minute confluences. Even if the daily 4 hour, 1 hour, 15 and 5 minutes is bullish, if we don't have 1 minute confluences, I'm not allowed to enter, and I'm not allowed to trade with confluences below my stop loss. So I have to do all of those for my next trade. And yeah, that's it from me today, guys. A big fucking loss. What do you guys think of these new charts, bro? I just changed. I reckon they look mean. And yeah, that's the end of the video. Big fucking loss today. We're gonna meet next week. We're gonna be strong, bro. Oh, nah, we're not even gonna force it. We're just gonna look for high probability trades. But that's it from me today, guys. If you liked the video, make sure to leave a like, subscribe, and